As we're nearing the end of the year, we want to give you guys our predictions for what we think the housing market and home prices are going to do in the year 2022. So we're going to discuss that in this video. As promised, make sure you hit that subscribe button as well as the notification bell. We love being able to release this content and share this information with you so you can make educated decisions and being in the know with what's going on in real estate in Utah. Also, anybody who clicks that subscribe button, we are going to be donating $1 to Wyatt, who is a close friend of ours' child that is struggling right now with some health issues, and so we're going to be making donations to him. So any subscriber that we have between now and the end of the year, we are going to donate $1 on your behalf to Wyatt. So please hit that subscribe button so we can help that family out. All right, so before we dive into it and talk about what's going to happen in 2022, before we talk about the future, I want to talk a little bit about the past, what's happened this past year, 2021, talk about the present and where we're at right now on pricing, and then we'll dive into the future stuff. So if we look at the past and the graph and the numbers, it's really interesting to me to see that on the national average, homes averaged around 18% appreciation this last year in 2021. Here in Utah, in northern Utah specifically, we saw areas with over 20% growth and appreciation. Areas like Davis County had a little over 23% appreciation growth. Those are some huge numbers. If you currently own a home, you've got a lot of equity that's built up over the last year in that home. And I saw a really interesting tidbit on social media the other day. Somebody said, would you rather invest $60,000 in the stock market or $60,000 in real estate? And what they looked at was, hey, if you put $60,000 into the stock market, you're going to get gains on $60,000, right? Whether stocks go up or down, you're going to get increases based on your $60,000 initial investment. However, if you invest in real estate and you put $60,000 into a down payment on a house, and let's say, you're looking at an investment property. So if you do an investment property, you got to have 20% down, right? So if you do $60,000 into real estate, that means that you are going to be getting increases on an asset that's worth $300,000, the value of the home when you bought it. So rather than getting these small gains on $60,000 in the stock market, let's put that same $60,000 into real estate and you're going to get gains on $300,000. So hopefully that makes sense. If you have any questions, leave them in the comments. I'll make sure and answer them. I know sometimes when I'm explaining stuff, it's like clear as mud. So that's what happened. Price acceleration this last year. Now, let's discuss what's happening right now, what we're seeing happening with pricing. I'll tell you the simple answer is it looks like prices have somewhat peaked. Like we've kind of reached a plateau. If you take a look at this graph and look at our percent year over year price increases, judging by, FHFA, CoreLogic, and the S&P, it was crazy all through the summertime. But as you see, as we're getting here into August, and then this graph, if it were updated and continue on, you would see that those prices have kind of just held flat and held consistent. Now, keep in mind, it doesn't mean that prices are going to depreciate. It just means that the rate of appreciation has slowed, but we're still well above the 25-year average of 5%. That's kind of what this graph is telling us is, hey, we had this crazy increase through the spring, first part of the summer, and like I said, we're starting to peak and plateau now. So now let's get into good stuff, the future, what's going to happen next year, 2022, and our predictions. Based off the research that I've been doing and stuff, I think that we are actually going to see the market start to balance, which is like, heck yeah, I've been waiting for the market to balance out for a long time now. So I'm really excited about it. I think it's a good opportunity for people who haven't bought a home yet to start looking at houses, as well as it just stabilizes the market when you have a more balanced market, okay? What's going to cause that balancing effect is this last year, 2021, we had crazy high buyer demand, very low inventory. That caused the imbalance in the market. I think with the new construction that's happening, as well as people putting their homes on the market, we're going to see that inventory, as I move my hand off my mic, we're going to see that inventory start to balance out, right? So the inventory is going to rise. Buyer demand, I think, is still going to stay fairly high, but it's just gonna, with that inventory rise, gonna start to balance us out a little bit. Now, that being said, I do still think there's gonna be housing appreciation in 2022. It's just gonna be at a much slower rate. And with the crazy fast speed of appreciation we've been seeing this last year, it's gonna feel like the market's basically like holding steady and holding flat. So if we take a look at this graph and we look at the home price forecast from the 6 major entities, Fannie Mae, Freddie Mac, the MBA, HEPS, Zelman, and NAR. In my opinion, I actually think Fannie Mae and Freddie Mac are a little high on their estimates at 7%. I do think that we're going to be closer here in the median of about 5% appreciation over the next year which, like we talked about, is at the 25-year average. So 5% is a normal market. It's a steady market. It's really good. Bottom line is, there have been historic levels of appreciation the last year. We're seeing right now as we end 2021, those levels start to peak and plateau. We will continue to see prices appreciate in 2022. However, it'll be at a much, much slower rate. A rate that I'm predicting in Utah here is probably going to be between like 5 and 8%. And again, all of this is great news for the housing market. I'm super excited because it's going to create a more balanced, even market for buyers and sellers.